And welcome out to today's halftime report presented by TackleTrading.com. We've got Coach Cody, Coach Noah, myself, Coach Tim, and we are live. Noah, how you doing this morning, brother?
I am fantastic. I'm marvelous this morning. Cannot complain.
Can't complain. Cody,
How about yourself?
I'm doing great, man. I'm doing great. Excited for the weekend. You know, the market's got a little mini pullback. We're going to break it down. We're going to talk about it. Is that setting up for something else? I don't necessarily think so, but we'll see. I'm going to get all the analysis. Let's go ahead and bring your screen up if you can, Noah. And we've got to also talk about the Jeff Bezos thing at some point.
Well, that didn't take long to get to.
No.
Seconds.
Let's address the elephant in the room here, right? The most powerful investor maybe in the world in terms of a CEO.
Well, we don't know if it's an elephant yet. I mean, it has been released.
I was going to use that joke, but I thought better of it, Cody.
No, I would write for it.
For those of you who don't know, Jeff Bezos recently put out a blog, made it very public that he's being extorted from the National Enquirer about some solicitous pictures that of him. I think we call them, I'm not going to reference them, but he says, hey, I'll just release it. If you want to extort me, I'm going to do it. He put a blog out there on Medium. It was pretty incredible news. Cody, what was your reaction to that Amazon deal? Why don't we start right with Amazon?
My reaction was I just started laughing. That's what it was. It made my day. Then I kind of said something though. There are different ways to react when you're being extorted or bad news or something's released on you. And one of the ways is to just say, okay, you're going to do this. Well, here, I'll do it for you. And it kind of like pulls the rug out from the person who's trying to, blackmail you or whatever. And that's the approach he's taking. And I think it's all the smartest one.
Mm-hmm. Amazon's down, not necessarily just on that news, but it's one thing about that company. I was looking through this, Noah, and one of the questions I have this morning and generally heading into this month of February and this weekend is, what is going to propel the market higher? Is it going to be fundamental valuation? I don't see it. Amazon's still overvalued, for example. PE ratio at 90, forward PE ratio not attractive. Is it going to be the charts? Maybe. I guess you have a technical rally. Could it be seasonality? Could it be, something else? It might be the Powell put. I was reading some testimony about that. When Amazon's down to flat, even on lack of fundamental news and whatnot, it's an indication that this market is slowing down. Now, the S&P is only down 0.5% here today, Noah, and the NASDAQ's even right in line with that. When you hear news about a CEO, leave the details of Jeff Bezos' private regions aside, what do you react? I mean, is it just chart-based, technical-based? Do you just go to the chart and see what happens? How do you handle that?
Well, I think it's start out with a comment on that. I think it's cosmic karma. Alexa's constantly digging into the private lives of others. Turnabout's fair play.
All right, that was a better joke.
Not sure how that happened.
He also has that company Blue Horizon. There's got to be a rocket joke in here somewhere.
Works for me. I think it's a technical play, Tim. I think at this point in time, the fundamentals with the valuations have been questionable for a long time.
Yeah.
And that's not new information, but the market, kind of the V shape of the rally is, I think, I see the technical strength there. And then seeing the market come up and hit that 200 period moving average, do a pullback down into the rising 20 period moving average. And, you've got a technical crossroads here. And this is one of those situations where I don't really necessarily try to predict it. I just try to react to it because I've got reasonable bullish retracement set up. I think there's going to be good opportunities for bullish retracements in the market this coming week.
Mm-hmm.
And that's what I'd be scanning for. And then, if it ends up failing as a setup, we know how to manage trades, and there's going to be bearish opportunities out there as well. So,
Yeah. No, I'm seeing that as well. I mean, the definition of a pullback is very important here. You do have 3 red candlesticks, doji candle, red candle, red candle. I don't know what the percentage retracement for you has to be in terms from tip to trough on the retracement. Is this a pullback by definition, Noah, or is it a developing pullback?
Textbook pullback.
Mm-hmm.
Minimum of 3 candles is usually what I think defines a pullback. And then it could be deeper, but I prefer the shallow pullbacks. They tend to run better.
Yeah.
So I would expect the market to behave very much like it did on the last pullback. It might consolidate a little bit before it breaks out. because of that 200 period moving average. And, it seems to be a fierce technical zone right here around, the 27 and 2750 ballpark.
Mm-hmm.
So I think it's got the upside potential because of the seasonality. I think my bias is cautiously bullish with seasonality coupled with the fact that people aren't necessarily rational and valuations get thrown out the window.
Yeah. This pullback here, I still have a very slight bullish bias on the market. I'm going to be very interested to see what the coaches have to say this afternoon and get everybody's take. We're above the moving averages. We're below the 200 period moving average. Where's support and resistance for you on this chart? Because there's a couple of debate points for me, 2620 or 2600, because it's a round number, or this new resistance we just put in on a pivot, or is it the one back at 2800? Kind of break that down for me, if you would.
Well, I think, yes, they're all valid. It's a matter of which one the market responds to. So yeah, right here at this kind of 26, call it 80 ballpark, where you have old resistance back here, and the rising 20 period moving average. That's going to be a minor support zone. If it dips a little deeper, I think that 2620, 2600 ballpark coincides with the old support pivots back here on the left. And then you've got that 50 period moving average down there. So that's, whether people are focusing on moving averages or supported resistance, they probably come to the same conclusion, which it might be a buy zone as well. So if we don't see it rally off of the 20 and rally off of that shallow pullback, you might see a deeper pullback and then a rally. But, I think below that, I'm not sure where the support would kick in, if it's going to be down towards 2,500 or not, but that overhead resistance, I think, also is a fierce force for the market to overcome.
One of the stocks I talked about in the daily email today for Tackle Today was Boston Scientific, BSX, if you'll bring that one up. And it had earnings this week. And I actually got a question in my inbox recently about how to handle callers and earnings. And we do a lot of content over at Tackle Trading about covered calls. When you're post earnings and you're fading higher here, hitting a 52-week high, Noah, is this a new entry point? How would you approach a stock like this?
I like to buy the breakout, and I think it's starting from with the earnings being the fuel for it. That's kind of a fresh start, and I think that's a good potential breakout. I like this watch list. This would be a great candidate, I think, for quite a few different strategies.
Mm-hmm. Yeah. All right. Move on to the Dow, if you would. YM contract. And let's break down the large caps. They've had relative strength, in my opinion, for quite some time. And one of the subtle differences, just that 200 period moving average. On the S&P, we were below the 200 MA. And on the Dow, we are now above the 200 MA. Very similar chart in other regards. If you took the MAs off the chart, they almost look identical. Mm-hmm. Which one do you have ranked higher, the Dow or the S&P?
The Dow's running a little stronger right now. Mm-hmm. Again, fewer candidates, fewer stocks in the index to move, but it's up above that 200, which is the only index that is. So it has to be the leader, right?
Yeah, I think so. I think so personally. Bring up Boeing, if you would. Boeing has been on many of our reports over the last few months. It's one of the most popular companies in the market to trade. It broke out into new highs. You now have 3 candles pulling back on a very, very aggressive trend line. You actually have a catalyst point somewhere in here. No, I'm trying to find where it is. I like the doji, not a trigger today. It would need further information next week, either a deeper pullback or a setup. But that broke out of a new high, and you've got the developing components of a kiss hello pattern where you're going to start running. Kind of break this one down for me.
This one's interesting because, one, they absolutely crushed earnings. We've talked about that here. I've heard you and Matt going off about how phenomenal their earnings report was. Incredible amount of upward momentum establishing new highs. And that pullback, even though it's shallow, is coming into that old high, which is around 395-ish. Mm-hmm. So I think, whether it's this signal candle, you get a couple more signal candles. I like this pullback. I really like this pullback.
Yeah, I like it as well. Also pays a dividend. Good candidate for spreads, and it's a good candidate for poor boy covered call type scenarios. The one caution I would have for anybody out there trading the poor boy covered call is, remember, it's a diagonalized calendar spread, and you do have complexity on the top end of that. So if you start running very, very aggressively, Noah, you can actually run into some problems when you do it that way. I might actually just prefer like a bull call spread, or one of your, ratio butterflies, things like that. There's a lot of different ways you can play Boeing up here with the option spreads.
Absolutely. That's one of the nice things about a stock like Boeing is you do have so many, the options are liquid, easy to find strike prices to help you build a trade that works.
I have to ask you guys, is Boeing even going to be around with this Green New Deal?
I don't think so, unless they start making trains.
Yeah.
Listen, I mean, here's the thing. We were talking about it in the pre-show. The reality is it's a brilliant marketing phrase, you know, the new Green Deal. Is that what they call it? Green New Deal? Which one is it?
Yeah, Green New Deal is what it is. I mean, it sounds a lot like socialism to me.
Well, so is the New Deal. But hey.
Yeah, that's right. One of the most left presidents of all time was probably FDR, if you really think about it, you know, capital expenditure, government spending, all that kind of stuff. So, yeah, it would be a very leftist move. Obviously, they are not selling that very well, Cody. The execution so far, not very strong, but it is an interesting thing.
When you have the lead of your own party, Nancy Pelosi, laughing at you for the deal that you put up, it's not going to go anywhere. I mean,
I understand, young man. You know who else is not going anywhere is General Electric. Bring up GE if you would, down 3%. Every time the stock is down, we're going to look at it. That's my new rule.
Hold on, it's so far down there. I got to readjust my scale.
Uh-oh.
There we go. All right, down here in the basement.
Very nice segue, by the way.
You know, yeah. The hard thing about GE, though, Noah, is it's a reversal pattern on a pivot. Long-term weekly charts are ugly. Short-term daily charts are showing strength. This is the typical symmetrical triangle, which is a very difficult pattern to predict. I've had a hard time with them in my career, 14 years. If you look at the weekly coming down and the daily going up, you've got a battle going on here with multiple time frames. Explain how that works a little bit, because I know I tease GE and I go after it quite a bit, but the long-term charts are still ugly to me, right?
Oh yeah, I mean it's definitely a downtrend without a doubt. I mean you're making lower low, lower highs. I mean if you were looking, if this was a daily chart, would you even think twice about that being a bearish retracement? Probably not. Mm-mm. You wouldn't even think twice about it. In fact, you'd look at that and go, "Ooh, I'm going to short that." You know, and I think that's when you cross that with this minor, you know, upswing. It's crossing up above moving averages. It's a phenomenal recovery from a percentage perspective. I mean, down at, you know, low at 6.6, 6.6, and up here, you know, it hit a high of 10, almost $11. Mm-hmm. And the pullback here, I mean, they did have their earnings report came out, and again, they actually missed the estimate, but obviously people were enthused enough about it that we saw a gap up. It's now filling the gap. So from a technical perspective, I would say it's between that rock and a hard place, much like the S&P.
I agree. One company that is up big here today, in fact, the biggest gainer on the S&P is Coty, C-O-T-Y. And Cody, I know you spell it different, but it does make me think of you whenever we look at this company. $9 stock up 27%. When you see a stock this size, Noah, running, options are not necessarily needed. You have the potential for stock plays here. Reversal off the bottom is going to trigger those, hey, I'm getting it cheap kind of mentalities. How do you read a reversal and a gap out like that?
Well, when you get a gap like that, and I kind of look at the context, I wouldn't be surprised to see the gap fill. But I would apply my general gap rules. I would not consider short selling it unless it crossed below the bottom of the candlestick on the gap. And then I probably wouldn't go out and buy it unless it took out the high. Mm-hmm. So I would treat it like a traditional gap play in a short-term direction, just with the stock. You know, it's cheap enough that you can get enough leverage. You don't need options on it, nor would it be that effective. So I think the best way to, you know, trade something like that is just to do the bracket order type scenarios, or, you know, trailing stops or things of that nature to help you manage the risk.
Mattel, interesting news here today, because I haven't thought of this company in a while. MAT up 23% on stronger than expected Barbie doll sales. Noah, I have daughters. They don't own Barbie dolls. I don't know if your kids did. I wouldn't judge it one way or the other, but I didn't know that was still a big thing.
Apparently it is. I guess enough. You know, I don't know what else they've got going for them product wise. It's not a stock I followed closely, but just again, from that gap perspective, gapped up above the 200 period moving average. Long upper shadow tells me there's some profit taking for sure. Mm-hmm. You can actually look at it where, you know, let me zoom out. It came out and hit that kind of support resistance neighborhood, and you're seeing that selling pressure. So I treat this the same way. If it starts to cross below the gap, you might have a chance to short sell the overreaction to the earnings, and you might see a downward movement if it crosses back below that low in the 200 period moving average. This one, the high is quite a ways out there. So waiting for it to take out that high, that would take some patience. It would take some time, I think, to build back up to that.
Yeah. Give me a look at EA, if you would. The gaming stocks have been really volatile this week. Missed earnings, you know, earlier in the week. Take-Two gap down. EA gapped down as well, but then it has come all the way back up into resistance here, Noah. This is a very difficult technical pattern to read in one regard. The volatility was down. The gap fill has happened. If it breaks here, is that a legitimate trigger and signal to the upside? Because we are breaking right now.
Yeah, I think so. I mean, it gapped down initially. It creates a double bottom with the way that gap down filled, and it's closing near the high off that. I'd probably want to get a look at how much volume is running behind today's breakout. But yeah, I think that's a legit breakout.
Yeah, it's a tough one. I mean, look at Take Two, if you would, TTWO. Similar company, similar size. Obviously, this entire industry, they're going to move together. And a lot of the news earlier in the week, they had gaps down together. See, this gap fill is now setting up as a kiss goodbye. So they're completely opposite patterns. And I don't expect EA to run into a bullish uptrend and Take Two to go into a bearish downtrend. They're too correlated. So who wins this fight? I have no idea. But this backfill rally, Noah, is actually a classic technical pattern to sell short.
Yeah. I would probably just saying based off of the pre-existing conditions in the gaming stocks, I'd be more inclined to the bearish side.
Yeah, it's kind of what I'm looking at. And one to remind everybody of, Activision, which is a Tackle 25 stock. They've had some fundamental changes this year, and I may be taking them off. We are going to update that every quarter, which means the 1st of April before the next earnings season, we'll have an updated list. And I expect most of the companies to stay the same, but you're going to have rotation of 2 or 3 or 4 names every quarter, I'm sure. Activision, if it stays below this trend and it actually stays below support in this downtrend, it's going to be a tough one to make a call for, but we will know much, much more next week after their earnings report. This is the candidate. We were talking earlier in the week. Disney earnings, that's not the kind of stock you need to collar. But an Activision, if you own Activision, this is absolutely the kind of stock you would need to collar. Do you agree with that, Noah?
Oh, yeah, absolutely. I think, with the earnings there, if you own that stock and looking at its history of gapping and moving a little bit around earnings, yeah, you definitely would want to color that.
One of the big companies in the news here today is Wells Fargo. I don't know if you saw that they had other customer outages. And I was even seeing a few people I follow on Twitter, Damian Lupo, who I had on the podcast once. He's like, get your money out of this garbage company. Obviously, customers were not happy when they saw that they could not access their accounts.
I'm literally one of those. My wife was paid yesterday, so we were trying to pay bills and couldn't look at the account.
Yeah.
No idea.
Yeah. They have made strides to try to repair customer relations, Noah, but now you have a confirmed breakdown off of a V-shaped recovery into a downtrend. That's bearish.
Yeah, and for the rest of the financial sector, I'm not as bearish on, but I'm not a fan of Wells Fargo.
Mm-hmm.
Yeah, I think that that's a hard bit of trust to regain. It's been having complications. I saw people posting on social media that like they were stuck at the gas station, they couldn't fill up at the pump type stuff. And that's that erodes confidence quickly. So I'd be more bearish on that than anything.
Sure. Yeah, I'm looking at the Dow Jones Industrial. By the way, the internals, 8 advancers, 22 decliners. On the S&P, it's more like 150 and 350. Weaker on the Dow here today than the broad markets, but the markets are down about 0.5% or so. They haven't really sold off of the initial sell-off pre-market in the morning, kind of back and forth as we're heading into the weekend. United Health is down 2%. UNH is the top loser on the Dow today. Give me a peek at that chart.
All right. Kind of has that look of a failed new high coming down. I would expect it to pull back and find some buy support on that 200 period moving average that's rising.
Mm-hmm.
Oh no, you guys got to believe this. Check this out. Come here, naked boy.
Oh no.
Yeah, we got naked baby. Hi.
Hey buddy. Hey buddy. Do you know who Jeff Bezos is?
He is stark naked. He's got business socks on. Does that count?
Yeah. That's so funny.
If you look,
we gotta note this video in like 10 years from now. I'll be like, hey son, look, you were live on YouTube.
You were live on YouTube. This is the kind of thing that happens at the high school graduation when you get super embarrassed because your dad punched you. Oh,
that's classic.
Speaking of kids and teaching your children, I saw some interesting stuff in the Clubhouse last night before bed. My youngest daughter, she's like, Dad, what is the stock market? And I'm like, well, it's an equity market where you buy and sell shares of stocks. She says, no, Like, what is it? And we had like a 15-minute conversation before bed about how companies that are owned can go public and traded. It was really cool. She finally had shown some interest in it for the first time in a very, very long time. Teach your children out there. There's a lot of different ways to do it. And I saw something, really fascinating this morning. You can't force them to do it. Be the inspiration, be something that they would want to see and learn about because you love doing it so much. I think it's really cool, Noah, that you have your kid there. How old is that young man, by the way?
2 years and 3 months.
2 years, 3 months.
He knows how to say doji. That's pretty important to me.
Once you get him on that lap, see if he can find the trend.
Yeah.
I bet he could.
He's probably a little ways away from that, but he's a pretty sharp little kid. He can differentiate between gold and silver too.
I like it. All right, moving through the Dow here. Pfizer, Cisco, Merck, and United Technologies are all up, but not much here up today. JP Morgan, DuPont, Intel, Walgreens Boots. Give me JPM, and let's take a look at Goldman Sachs as well. With the Wells Fargo news, obviously the financial sector is turning over. JP Morgan is the same, and definitely a pivot down here. Have you missed the entry point on the daily?
Well, I look at the weekly, and I backed out to the weekly just because it looked like such a strong kiss goodbye setup. That's textbook kiss goodbye. That doesn't mean it's going to drop, but that's textbook kiss goodbye.
Mm-hmm.
So, from that daily perspective, I don't think you've missed it. I mean, you might get a small rally out of that, but I would watch for the same pattern to form here because I can see where we might have a forming head and shoulders on that. With that initial drop, you might see an attempted rally, but if it fails, that really reinforces the kiss goodbye and it breaks that $100 mark again. That's a big benchmark always.
Yeah. Take a peek at Goldman Sachs as well. The evil empire.
Well, I am changing my bias on the financial sector pretty much altogether. Just looking at a few more of these. That seems to have that same kind of kiss goodbye quality to it down below the 200, weekly moving average. From the daily perspective, there's some weakness in there. So, yeah.
If you think about it, and there is validity in the bottom-up analysis. Mark was teasing me the other day because I was mentioning, and I do this in the scouting report planning. When I'm doing my scanning, I'll look at the major components of sectors before I rate the sector. And for me, that's important because what Goldman and JP Morgan and Wells Fargo are doing is going to dictate a lot of the movement in that sector. Top-down analysis is how we approach our daily routine. But when you're trying to construct a bias, you can do some bottom-up analysis, which essentially is what we're doing right here.
Oh, absolutely. I think it kind of creates a chicken and egg question. With the candidates on the index, like what actually makes up the components of the sector. The big fish in the pond always make the biggest ripple. So you got to look at those key players, I think, because that's going to ultimately dictate what the index does. And it works both ways, top down and bottom up. But the big players are the influencers, that the market's going to respond to.
Give me a peek at GT if you would.
Goodyear Tire.
Auto part makers were destroyed last year. They were one of the worst performing companies. And a lot of that is trade deals, problems in Europe, all that kind of stuff. These are international type companies. Goodyear Tire is down on a really weak earnings report, breaking below a key support zone. Obviously, you're down 8% today going into the weekend. It's not like a trigger here today, but that's an ugly chart at hitting new lows. When you get down here to $20 or so, Noah, there's a tendency, I think, from investors and traders and human beings to think it can't go lower. Break down that bias or that assumption people have and kind of blow that out of the water because things can go lower.
It can't possibly go lower. That's how I lost my first account. Not a joke. That's literally how I lost my first trading account. It can't possibly go lower. It can apparently. There's the market, you have to remember, is not necessarily a rational instrument. It's very much driven by fear and greed. And once they smell fear, the bears respond to that, and they are greedy, and they'll come in, they'll borrow shares, they'll short sell them from people who don't think it can go lower, and it will go lower.
Mm-hmm. Yeah. Obviously, automakers are going to be under pressure here, and auto parts makers as well. They kind of all trend together, in my opinion. Take a look at Tesla, if you would. Tesla is an interesting company for me. I had a long conversation with a student last weekend, and I was saying, they're a bad company. and she's like, no, they're a great company. I said, no, they're a great idea. And I still even think you could be open-minded and debate Elon Musk's leadership and potential. I think the whole genius card has kind of got thrown out the window the last year, but it's in the middle here, Noah. We're at $300 in between support and resistance. Post earnings, do you have a read on this one?
Well, this is one where the trade, the chart is so sideways and it's so stuck between like those support and resistance zones. I think it's impossible for me to have a directional bias on it from a technical perspective.
Mm-hmm.
So from that technical perspective, it's as schizophrenic as it can be.
Yeah.
So, and then, from a fundamental perspective, I think you're right, Tim. They've got some major problems on paper. And they're awesome ideas, awesome, products. Execution and delivery is the issue. And I think it's just a matter of, again, fundamentals. At the end of the day, if they're losing money, they're not, I don't think they posted a negative earnings here, but they seem to oscillate between losing a whole bunch of money and making some money.
Yeah. 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 And they actually issued that they are going to continue to lose money in the future as they move forward. They got to figure out their production line issues and also get a price point that makes sense. They keep trying to lower the price on that lower car, but they don't make money at those prices. And so it's a catch-22 for the company, I think. Look at the NASDAQ, if you would, NQ contract. Let's keep moving through our different indexes as we're breaking down the markets. And by the way, welcome out Halftime Crew. If you're here and you're watching and you're enjoying, give us a thumbs up. We've got 60 people here live. We usually get 300 or 400 people to watch it on a replay. It's always great to get that thumbs up. Comment in the comment section below. It helps us get the word out. Pretty simple thing. NASDAQ's on a pullback here, Noah. Same pattern as the S&P, but if the market's going to run, NASDAQ usually is going to lead in that regard from a percentage perspective. Any new read here with this pullback? Do you like this one better? Same?
This looks kind of like identical twins when you compare the S&P and the NASDAQ. There are so many similarities between the two. I couldn't tell you which one's going to lead, or which one's going to follow. I think they're marching in step. And so whichever way the S&P going, that's where I think the NASDAQ's going. I think once you get the breakout, you'll see them perhaps distinguish, where the strength is. And I wouldn't be surprised to see it in tech. But the S&P is energy heavy. And if energy does rally and we see, some of those energy sectors start to break out, you might see the S&P take the pole position.
Mm-hmm. Yeah, a little W pattern on the intraday. Actually, as a day trader, you'd probably be looking for a break one way or the other. On a lazy Friday like this, Noah, I don't usually like to day trade later into the day. Things can get really funky and start to slow down and pin themselves to certain prices. It's the kind of day where I do my prep, my scanning, and might get ready for next week. The big adjustments on the end of the day on a day like this is, do I hedge if I need to, on certain stocks, right? Do I buy a put option against covered calls if I'm worried about something, and do those little things, adjustments? But really it's about planning and prepping for next week at this point for me. Do you day trade on Fridays at all?
No.
Yeah.
Not at all. I mean, I'm usually just closing out positions for the week. That's about the extent of the trading I do, is cleaning house.
Yeah. House cleaning and getting ready for the next week for sure. Break down the FANG stocks real quick. Let's just rapid fire through them. Not long analysis, but Facebook first. Breakout.
Sorry. I thought I was Kramer for a minute there. I would say that hovering around the 200 period moving average and holding that gap is interesting. If it breaks below the gap, you can probably make some money on the downside, but it would be very short lived, I think. This
is a K trade. It's a gapping K trade, but this is a K trade. You could go either direction here. Apple. I love this pullback.
Sorry.
Oh no, yeah, I was going to say I love this. This was going to be one of my picks for this guy.
Yeah, I like it. It's a beautiful chart. It's a first retracement of a breakout. One of my favorite patterns. Usually, what comes after this is a nice, healthy run.
Now, by the way, it could pull back another 10 points, and everything you just said would be the same analysis.
Right? Wouldn't it be like even it came down to that 50 period moving average ballpark, the 160 neighborhood? It's still a strong buy.
Still a strong buy anywhere where these candlesticks develop in here. And that's really following the candlesticks down as you're getting ready for a trigger in a retracement is an important mechanic. I know that's something you teach in the master trader class.
I mean, go back and look at last week's, I think I did the options report, but you go look at the multiple time frame analysis I did on that. That would be a really good example of multiple time frame analysis where from the big weekly macro chart, it's just a big bullish retracement into a buy zone. So you got the rally there. And then, you go down into the intraday chart, you can see your slowing momentum and a bottom forming, and you're poised for a breakout.
Mm-hmm.
So, whether or not that, I wouldn't expect it to take off today, but boy, wouldn't that be a nice setup for next week to be able to, buy that off that retracement?
It's developing. I'm sure it's going to be on a report somewhere this weekend. I know Cody had it. I had it. Who can race there to get it in there first, Cody, and take credit? I'm not sure, but I love this company.
Well, while you're running the show, I can easily get it in there right now.
I don't need the credit. Obviously, it's a group effort. Amazon, though, is the concern, and this is breaking below a pivot point here. If there's anything that's going to bring this NASDAQ down, it's this stock right here.
Well, I would agree, and I'm looking for chart patterns that look like Bezos' picture, but yeah, I don't know. It's breaking that support zone at 1600 ish.
Yeah. If there's anybody that does not know and you're not in on the joke yet, Jeff Bezos was, well, Cody, you break the news here. You explain it. You're the young man. You might be more blunt than I am.
He has a woman that when a man and woman love each other very much and they bring a camera with them, she's extorting or trying to. She basically said, hey, I want some money or I'm going to release these pictures. And Jeff basically said, I'll release them before you can even try to release them, just so you can't extort me. Go away.
Yeah.
So that's the extent of it.
It's a powerful man with a lot of money saying, hey, I know you have dirt on me, but I don't care. I'll put it out there first. National Enquirer. I find that the whole thing to be fascinating, by the way. I think it's a huge power play and probably the right move if that's what's happening behind the scenes, which obviously it is. I mean, he had to do something.
Well, also, what's the worst that could happen? He's already getting a divorce. So
it's like, Alexa, release the dirt. I mean, I think it from a fundamental perspective, I've had a lot of doubts on Amazon, but it is still such a strong growth company. I mean, the number of days in the week that I actually have to leave my house because of Amazon is, I'm going to get some vitamin D deficiency if I don't get more sunshine.
I'm with you, brother. I get it. And I love Amazon. I love their future. I love the company. But from a technical short-term perspective, that's breaking a pivot point at 1600, a close below 1600, Noah. Some people could argue that's an M pattern selling off and you've got a downside play here. Others might step back and say, well, in a grander scheme of things, we're in between support and resistance and the tech sector is bullish. This is a complicated one to make a call on, in my opinion.
Well, let's back out and look at the weekly before we move on to the next one. And I can see, lower high right shoulder type scenario off of a kind of an ugly but macro head and shoulders with a little uneven right shoulder there. So keep an eye on that one. And again, I think it may go whichever way the market goes, but I've always had my fundamental suspicions. The PE ratio is not as bad as it used to be, but it's still up there.
No, is it like 14,000 or something like that? Or
no, I think it's back down around 100 these days, but it was well over 300 for a while.
Well, and that's part of my concern. Go to tackletrading.com or FinViz, either way, wherever you can get a heat map and get me a PE ratio heat map. Because one of the questions I have, and I'm going to have it for everybody in our scouting report planning meeting later today, is what is going to propel this market to break and run? Okay. Because I know we're on a pullback pivot, which can create a little swing trade move. Technicals can do that. But I'm looking at the overall picture, and you've got resistance on the S&P at 2,750 and 2,800, and we are not that far from those resistance points. So how much upside do we really have in the market? PE ratios are high. Multiples are high. Amazon's got a 99 PE ratio. So the fundamental investors aren't going to come in and buy, right? I mean, who's going to be buying at these valuations thinking they're getting a great deal on the market? Everything in the market right now is a technical market or a pal put type market. The scenario with the Fed is a different one, right? And we don't know those variables. But Noah, explain what we're looking at here from a PE ratio heat map perspective.
A lot of red, Tim. Sorry. Yeah, that's a lot of red. You're seeing, high valuations. What it comes down to is the amount of money you have to put in to buy the security. The price of the assets are high compared to the amount of earnings they produce. And so for Amazon right now, for example, you have to put in $100 for every dollar, every $100 you put in, you might get $1 out. Google on the other hand is at 27. Now historically speaking, anything above 30 is considered, you don't want to touch it. Under 30, maybe, but when they get below 20, they're a lot more, palatable. And you can look down to the financial sector, as ugly as they look on the charts, are, solid from a valuation perspective.
Mm-hmm.
And that's probably the strongest sector in that area, is the financials. So
kick into the forward PE as well. And one thing that you're going to hear throughout the year is the slowing global growth component. Forward PE is taking that growth component into account. And people will pay more for Amazon because they think they're going to make it up on the back end. That's the philosophy, right? And they've been right for the last 10 years. Amazon always carries a high PE ratio. A 60 forward PE and a 90 PE ratio on Amazon are actually lower than their 5-year average. I've seen Amazon at 200 and 300 PE ratios. So the fact that it's high doesn't necessarily mean it's going to come down. But it also, if the market has concerns or turns over, it's one of the first stocks that's going to take it on the chin.
Well, it goes off the philosophy of, do you invest based on cash flow, or do you invest based off of predictions and projections? Because most predictions and projections are typically inflated to a point. So that's kind of this. The PDE ratio is more of a value-based type of investment.
Mm-hmm.
Yeah, I mean, it's basically what they have done versus what they project they're going to do. And so, the PE is actually a pretty definitive measure of current conditions, but forward-looking growth is still an unknown. But I think their models are modestly or moderately reliable. But at the end of the day, I think it's all swag, scientific wild-ass guesses.
Well, you got to pick your lane, right? I mean, it's either technical or fundamental or a combination, value-based. I mean, everybody's got to have their own approach to markets. I know from a technical perspective, the way that I trade using both, for a long term, I do valuation, the can slim type methods and whatnot. Short term, though, it's going to be charts. The chart is set up on a pullback, but outside of a pullback pivot run, I have concerns about the trend from a longer term perspective, I guess, is my major point here. And I'm not going to get aggressively bullish just because we're on a pullback. I'm going to be moderately bullish and be cautious. And by the way, Adam Stewart, that means, yes, I'm on the fence again. Okay? So I'm peeking up over that fence. I'm looking at this thing and trying to figure it out. Amazon has me scratching my head here today, Noah, because if that stock sells, I don't think the NASDAQ can run.
No, it'll pull down the FANG stocks, and it'll probably pull down some of the other candidates like Facebook with it.
Yeah. All right, go peek. Let's go back into the charts. Let's keep working through this. I want to look at Netflix and Google and Microsoft as well. And then we're going to go on to the RUT, the dollar, commodities. Then we're going to talk a little bit about scanning. Netflix actually on the daily chart looks great. Pull back to 340, found a floor, a little candle intraday is starting to move back higher here. It's got a little M pattern developing too. The difference is Amazon broke below its pivot. Netflix could go either direction here. A break above 360. What is that? 360 even would be a nice breakout point.
It's right there at 360 and change. So yeah, I think that'd be a great breakout point. And this is something I had a little debate, or not a real debate, just an honest conversation about with the Traders Lounge this week about breakouts and this kind of retracement. If I like it, I'll sometimes leg into a position before the breakout. I'll start a small position right now, like with that confirmation, just like a bull pullback, and then add to it if it breaks out.
Mm-hmm.
But I like Netflix. I like the 200 period moving average. I like the rising 20. I like the candle setup. I think it's forming a cup and handle, and the conservative trader is going to wait for that to break above that, 360 zone that you were talking about. I think that'd be a strong buy signal.
What a non-conservative trader might do is the debit condor or an inverted fly.
Oh yeah. Or even like a credit spread way down below, the 300 area, like low delta, way out of the money. You don't have to predict too hard.
I think we actually just moved into the green here on Netflix today. That's very interesting. Pulled back, was down a little bit. The whole market is coming back off the bottoms, not aggressively, but as I'm looking at it, the NASDAQ is only down 0.4%. It's up about 30 points off the index low here on the intraday. Google, then Microsoft, then we're moving on to the RUT.
Which Google? Google with the L? Ooh. Alphabet Inc. Nice little pullback into 1100. Bye.
Higher high, higher low, higher high, higher low, higher high, higher low, pivot, pullback, trigger. That's a nice setup, Noah.
Yeah, it might make a list or two this week. It's very much the channel right here. the moving average. So that's like a triple whammy for catalysts. I bet I could draw a fib on there and make it fit.
Don't hurt me, brother.
I'm just saying I could draw enough technical conclusions here that I would bet the farm on this. Of course, don't bet the farm.
Cody, send a message to Mark. I want a podcast debating the validity of Fibonacci's. I want Noah. I want myself. I want this to be an hour-long conversation, and I want everybody to prep for it because I'm going after him. All right.
Are you now?
I get it.
You're gonna outnumber your brother there because I think Mark's also it's Fugazi. I don't know where Noah stands on it.
Here's what I want to know: is if Fibonacci's got in a fight with Mark's 9-period moving average, who would win?
Get Frank there as well. Get Frank there as well. Frank
All
could
right,
take.
Frank's got to be there. Okay.
Break out, Frank. No, I actually think your opinion and my opinion are probably not that far off. It's valid as an indicator, and if it helps you make money, great. Outside of that, there are 8 billion other things that could do the same thing.
Yep.
Right.
Absolutely.
Google pullback pivot, interesting. Microsoft, last one here on the tech side. Large cap tech's in an interesting setup here.
Wow, that is the ultimate confluence. I mean, literally, look at this. It's a symmetrical triangle with all the moving averages in the exact same ballpark with the stock making doji type candles, right? I mean, I don't know if this is coming or going. This is a K trade for sure. They've got the dividend coming out, but just, I mean, look at that. I mean, you've got all those moving averages all trading right in there at the same time. So if it's breaking up, that's above all those averages and it's breaking that downward triangle. So
kind of feels like, you're in the backyard and you pinch the hose and it's going to release it at some point and spray one way or the other. That is confluence. That's a much fancier phrase than pinch the hose, I guess, which I like it. You sound a lot smarter than I do here today, Noah. Downward trend, upward trend, symmetrical triangle. Draw those lines for me if you would, because we've seen several symmetrical triangles. We referenced it on General Electric from the multiple time frames. These patterns are unpredictable. But we do know whatever trend wins the fight will tend to produce a new trend, right?
Yeah. I mean, this could be the type of thing you do a straddle, a K trade on. You can wait for confirmation and then take a directional trade. But the thing about that consolidation, like you said, Tim, and the analogy of the garden hose, I've always used like an analogy of a spring. It's loaded, it's going to pop, it's going to move. You just don't know which way.
Yeah. Yeah. Here we are working through the markets here today. Last index I want to look at is the RUT or the RTY. Either one works for me. And the Russell, we had a conversation about it yesterday. It's got upside here on a pullback. We're sitting at 1,500. You could even argue that this is the best pullback out of all the indexes because of the clear air to the upside here. What's your read on the RUT?
It's got room to breathe a long way up to that 200. The resistance zones are out there. It's a shallow pullback, rising 20. Again, I'm not sure which way. They're all going to probably have the same direction. It's just a question of if, not if, but when and which way. Mm-hmm. So I like the pullback. It's a pretty one.
I agree with all of those things. I'm looking at that RUT. I had a conversation with a student today here, Noah, and he had bear call on at 1,600. And he was asking me, well, how would you manage that? And I said, well, you got to have a plan. Either you hedge it or you exit it. If you're bullish, though, why are you on a bear call? And it was the original part of a condor. I also suggested that you could consider adding a new bull put back into the trade to also now balance it again until you get confirmation. When you're in a bear call that was originally an iron condor and now you're left with half of a side, I mean, what's your thought process on that kind of thing?
I always have a rule for like any sort of hedging or adjustment. It would be would I put it on if it was a new trade, not just trying to fix the old trade. Mm-hmm. And then, with something like that, you could always add a bottom leg back on if you were left with a, bear call. If you have the bull puts, they're fine. But, you have to just stick with your money management rules on those, because if it does keep moving in that direction, it's going to force your hand and you're going to have to close, roll, or, hedge or adjust a trade. And I usually start out with the first thing you do is close, because that's the simplest answer. So,
and that's almost identical to what I said. So I'm glad that, we're confirming our thinking. If you wouldn't make it as a new trade, you shouldn't add it as a hedge, right?
Right.
So if you're going to build a bull put in, it should independently be a valid bull put spread. Okay.
Correct.
So if those characteristics fit, fine. The other thing is your hedging strategy should be predefined and rule-based. You shouldn't be floating around like a paper bag in the wind. Newer traders, especially with credit spreads, they tend to over manage them and try to fix every problem when you should probably just have a simple entry, simple exit, and a clear design in the way you approach it. Obviously, the RUT is now sitting at 1,500 on a little bit of a pullback pivot. It's going to be an interesting one next week for sure. $DXY, and this is the big debate in the market. All of these stocks, lots of action going on. What in the world is going on with the dollar? We saw all this dovish sentiment. Powell came out, talked about how they're not going to be as aggressive with interest rates. The dollar started to sell. Then out of nowhere, 6-7 candles in a row, just right back to the high side. What's your read?
Well, I don't know if it's so much that the dollar's strong or awesome as much as it is perhaps the other currencies are stinking up the place. It's kind of that old beauty contest. It's not a beauty contest. It's a least ugly contest. And I think the dollar still holds that position.
Yeah, I kind of feel that way as well. I know in our prediction podcast, which you were on earlier in the year, we talked about the projections for the year. And I felt like the Fed would be more hawkish than they were in the sentiment and the tone in their last few conversations with Jerome Powell in the market. But I thought the dollar was going to run and rally, and hit the high side, 9,800. By the end of the year, it's showing a strength here. The pound is down. By the way, the pound dollar cross pair, I guarantee, will be on the Forex report as a pick. Yep. The pound dollar cross pair is setting up beautifully for a trading setup for a swing trade. And there's a lot of ways to trade that. There are ETFs. There's all kinds of stuff. We'll talk about them in our reports over the weekend. Crude oil, gold. Let's look at the commodity market. Crude light.
Crude. This is giving me mixed signals. It's got the little doji here, kind of in that sideways consolidation, but it's up above the 50 and kind of in that little bullish area. Seasonally, I expect oil to run, but I wonder about the inventories. I just read some articles that U.S. is now one of the top producers, net exporter, and I think the market's still flooded with cheap oil.
Mm-hmm. It is the ultimate K-trade setup, in my opinion. We tried to break 55. It's stuck between 50 and 55. I still see upside, quite frankly. I'm bullish on crude oil, but I'm also cautious until we get confirmation above this 55. Well, that news from Russia yesterday was also concerning, that they don't want to cooperate with OPEC. But guess what? I mean, who couldn't see that kind of thing coming? It's not like they're allies, all right?
They're so difficult. Putin, he just doesn't get along and play well with others.
No, he doesn't play well in the sandbox, does he?
Crude has people.
Crude has some of the biggest potential if it wants to take off, but it will require dollar down for crude to run. Probably that inverse correlation.
I think there's one other aspect that I always look for in the spring, and I think it's one of the reasons oil tends to run from that February, March time zone until about May, historically speaking, is that there's changing in formulas. And whatever inventory you have, they've got to replace as weather warms up in the northern hemisphere. Places it gets cold, they've got to turn over an inventory.
Mm-hmm. Yeah. Move on to gold if you would. One of the best setups in the entire market right now is gold, and we've been talking about gold. And I'm going to ask the halftime crew out there: how many of you guys trade gold? Do you trade GLD? Do you trade gold miners? Do you trade the futures market? Do you trade other components in gold? I love the metals market. It's one of my favorite markets. It's a part of our daily analysis for a reason, Noah. Pullback pivot trigger here today. I mean, that is a nice setup.
Yeah, that's a really pretty setup. That is the best looking pullback I've seen in the market, period. It is beautiful. Very, very actionable, down, you can trade it on the futures itself. You can buy the physical, of course. I don't care what price you get it at. That's never a bad idea. And then the ETFs, there's so many of them out there that are going to benefit from that, the strength of that trend.
Yeah, just run through a few of the more popular ones right now. GLD is probably the most popular one. 15 years ago, when I started trading and became a new trader in the market, this was the number one ETF held by investors in the marketplace. Today it's SPY, but GLD used to hold that spot. This tracks the futures price, right? And it's an ETF. It's got a little bit different mechanics to it, but it's pretty clear one, very liquid. GDX is gold miners, which is a little bit different. That's more of a high base here. Bull
I'm going to call that a bull flag. If you ever want to see a flag pattern, that is one.
Yeah.
Just it's just a messy pullback. It's
continuation pattern, right?
Yeah, absolutely. Plus it's hitting that $23 resistance area, and I think it's poised for a good run.
And then GDXJ, I was actually looking at the difference between these two different these are the junior gold miners, which are miners that have smaller cap in size from around the world. So some of your South American miners, those types of things, a little bit different fundamentals, but also liquid and tradable. All of these on a pullback pivot here today. There's a lot of ETF versions of gold. You can get exposure in the gold market in a lot of different ways. Yep.
Yep, absolutely.
All right, silver real quick. I think gold's better, but always the debate and conversation is which one are you going to play? Silver's got a different technical setup. Gold has momentum and trend. Silver has probably a more pure catalyst here, old resistance, new support, and a moving average. If you're ranking gold and silver, Noah, which one you putting on top?
Well, I think gold's stronger, but I think silver is going to follow through, and price of silver is lower. I think it's an opportunity to of course, trade the paper. And then I always suggest anytime you get profits from the paper, you parlay it into physical.
Mm-hmm. Yeah, that's the way I feel. Yeah. Yeah, you build profits off the paper asset. You take some of it out of your account, go buy physical metals, and so that you're starting to build a personal reserve for yourself, hedge against currency risk. I mean, it's investing 101 at this point, in my opinion, but so many people don't do that kind of thing. I talk to investors all the time about investing in the metals market, and most people nod their head and say, yeah, that sounds great. But when you look at statistics, not a lot of people have pulled the trigger on that yet, Noah. And I think, it's just education, right?
Well, that, and I think it's one of those things where people they don't, I think, have confidence in who to buy the physical stuff from, and, where to go get it, and, trust the dealer type stuff. They don't understand the mechanics very well, even though it's pretty simple.
Yeah. Interesting. Now, there's several things that I want to look at as we head into the weekend. Obviously, natural gas, take a quick peek at that, /NG, if you would. A lot of people trade this. I talked about it when it broke below that pivot. I had a bearish call on that. I think it's still untradeable in most regards. It has been in a precipitous downtrend. What a radical move, Noah. September, October, November, parabolic. It was literally blowing hedge funds out of the water. Then it just kind of collapsed, and here we are back down at the lows.
Yep. And that's one I still wouldn't touch personally. It's, I think it caught enough people off guard with that wild movement that I don't think there's a lot of confidence stepping back up to buy.
Yeah, I agree with that. /PA, if you would. We're going to be looking at these in the commodity report, or PALL in the ETF version of Palladium. Either one's going to work here. I love this trend, and we have had this one on the commodity report each and every weekend for quite some time. Bull pullback pivot run. Here we are now breaking into new highs. Now, Noah, when you reach a first target, how do you handle that? You take half of it off and let the other half run? What are some mechanics
it depends on what kind of position I have. I do a lot of the adjustments where, like, I'll, if I owned options, I'd sell something on it. Scaling out's always a good idea. Locking in profits is always a good idea. But if you can leave yourself with open-ended gain potential still, you want to, because it's breaking the new highs, and you can let it run for as long as you think it can run.
Mm-hmm. Now, Cody, you had a couple stocks here off of our reports from last weekend. FLIR, FLR, quick peek at that one. And by the way, if you're halftime crew, and are you watching all of the reports every weekend? And are you getting value out of the reports? Because our Fridays at Tackle Trading, obviously, we trade in the morning. I got my routine where I'm approaching the market early at the bell. I go through my process. I manage my accounts. We do the halftime report here midday. The day kind of flattens out, and then I spend the entire afternoon with you guys making picks, and we all go through our process and whatnot, and we get those reports ready for you guys so that you can get ready for Monday morning. It's good to hear that. FLIR here, Cody, you had this one on the stock report, I believe. Is that right?
Yep. I just this morning it was still moving. I think it's still got room to go. It's close, but I don't think it's too late to have entered this trade. But of course it is Friday. So if you're going to look at this, you got to see what it's going to do on Monday.
What was the first target on this one?
I believe it's $30, I think.
Management here, you've got to
we got to look at the risk to reward on it.
Well, earnings here in 2 weeks, Noah. I mean, obviously last week when we picked it for a breakdown, or 2 weeks ago, when it's breaking down, that gives you an opportunity to sell it short or play a put option. But now that if you're developing this, Yeah, find my target there, Noah. How would you manage that? Going into a weekend, you've made some
Going on
money.
weekend, made some money on Fleur. Target's a 30. Trail your stop. I'd probably give it room to breathe. One of the things I've noticed a lot of with newer traders is they tend to trail stops too tight.
33 was the first target. You're at 33.8. So you're literally within one ATR of your first target.
Looks like ATR is 108. Yeah, absolutely. So
yeah, interesting.
I think it's closing near the lows. That's another thing. You know, you've got some time until earnings comes out. So I think you'd stay with your original plan. Don't let the market change.
Two last ones here real quick, Visa and TXN. And as you break these down, Noah, one thing I want to talk about here today from a high level is how do we find stocks to put on these reports? I mean, everybody has their own process. What's your general philosophy towards scanning and identifying new opportunities?
Well, one, I do the, top down approach, just like we do in the 7 steps, Tim. And it's that same process where you're looking at what the market conditions are, you're determining what your biases are. And then I run scans accordingly. I think this week, the scans you're going to look for the pullbacks. There'll be breakouts, there'll be bearish trades, but you're going to find the bulkier trades looking a lot like the broad market. And so that's where I start. I start looking for stuff that looks like the broad market. And then, something like Visa here is a great example where you got a nice little breakout, a retracement, some moving averages. Once I find a candidate like Visa that I like, I start to look at the other similar stocks and see if they look the same. I look at the sector, see if it looks the same, just like you mentioned earlier. And once I'll figure out which one of the candidates I like the best. And it's just a process of elimination and just careful consideration. And one of the challenges I think with scanning is you tend to feed your own bias because you have motivated reasoning going on. But at the end of the day, if you can plan and structure good trades around it that have favorable reward to risk ratios and there's viable strategies in there, I think it makes it easier to pull the trigger after you've done that scan.
Yeah, I agree with that. I like the setup here, by the way. It broke out. Now we're pulling back. It's actually a new entry point if you missed the breakout. Nice little fading pullback here. TXN, last one here, Noah.
Got it. Like the pop up above the 200, the pullback to fill the gap. And it's got a buy candle down there, which is not necessarily a textbook, but a nice strong green candle. I think you got to trigger either above the candle if you wanted to wait for it to get back up above that 200 period moving average. I think there's a buy there. Could be a candidate for other things like bull put credits or something like that.
A lot of good setups. Cody, last thoughts here, young man.
Well, they just got a little bit of an insight into some of the picks I'm going to put on towards the report. Those are the 3 that I was going to start with, and those are the type of picks that I like, the breakout pullbacks. So.
See, these are the good kind of picks, not the Beso kind of picks. Man, that took a little effort to get out. Wow.
Well, it took him a little effort to get it out as well.
I'm blushing for some reason. I'm not sure why.
Pass. All right.
All right.
Hey, I'll tell you what, from a scanning perspective, one last thought on that. I'm probably going to go through 2,000 or 3,000 different charts here in the next 4 hours, I'm sure. Because I go through a real quick rapid fire on different pages that I have set up. I look at every sector. I look at all the patterns. I get it down to about 100. And then I go through a more detailed analysis on the big chart, right? And then I'll get it down to about 10 or 20 picks personally that I'll put into the scouting report plan. I always go from big to smaller, 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 smaller. I know there's a joke there. Leave that one alone. Let that one go. All right.
Or you lean into the skid. I don't know. You steer into the skid. I think.
So you got to steer to the skid on that one.
If you ain't rubbing, you ain't racing. God damn. But I'm going to go do that scanning right now. When we started trading, Noah, we actually paid for software, and it used to be in the marketplace that a lot of people had to pay for, like from some pretty complex software to do that. And now anymore, it's not mandatory, not necessary. It's not that it's not a viable way if that's what you're doing, but it's a different market we live in,
Oh, absolutely. It really has evolved, and it's so much easier to find stuff these days. we have a wealth of information. It just comes down to making sure we focus our attention on it, and we're, being efficient with it. That's one of I think the greatest values of those scouting reports is just efficiency. It saves time, saves money.
Yeah. All right, guys, we are done. And great job, Noah. Great job, Cody. We'll see you guys in a meeting here in a couple hours. Halftime crew, thanks for being the best part of what we do over here at Tackle Trading. If you're watching this, always reminder, like, share, get ready for the reports on the weekend, and go and get your watch list prepped. We're going to go bird dog it for you and go find the candidates, and you guys use them and get out there and get in the game. All right, we're out.